And we are here live this Wednesday, August 28th, 2024, with Miles Franklin, Precious Metals CEO, Andy Schectman. Andy, thanks for joining us back on Liberty and Finance.
Good to be here, Dunnigan. Thanks for having me, bud.
And I apologize to everyone who's out on the live stream that's been waiting patiently for us for 10, 12 minutes here because I had some technical difficulties, but we are now working. So thank you for everyone for being here. I see a lot of people are out there in the live chat. We're grateful for that. And we have a couple of questions, Andy, we'd like to field that came via email prior to us getting started. Before we go to the viewers who are in the live chat, folks, if you want to ask a question live now of Andy, make sure you are participating by being on YouTube, subscribe to our channel, and go to the live chat underneath this video when you're subscribed to our channel, and you can type your question right in the live chat, and we'll get it in front of Andy. And well, Andy, first, before we get rolling here, I just wanted to again thank you and for being here, and also to thank everyone for connecting in tonight, for sharing this, making this channel as growing as fastly as it is. And just to let everyone know, I just got back. My wife and I traveled across the country to a family wedding, and so we're just getting settled back in the saddle here, and good to have everybody here together tonight. Andy, one of the questions that was submitted from a viewer was anticipating that we may be heading into a major recession slash depression if we're not already on the slope or into it, that there's likely in cases of deflationary depressions and recessions, there are sometimes a collapse of prices across a lot of different things that had been the bubble of everything. And so the question from the viewer was, should we hold off buying gold and silver, anticipating a collapse in prices, and then scoop up our gold and silver at that opportune moment when we're seeing a collapse in the prices of everything? Your perspective, I know you've thought about this a lot. You've been through it. You've actually been through some of these cycles before. You did some major life upgrades to to your domicile, et cetera, by planning things appropriately. So what are your thoughts on that question? It's a real question.
I mean, I wonder how many people out there think that gold is manipulated. That's the first question. I know some of the guests on your show don't really think it is. I think it is. In fact, I think it's unequivocally manipulated and has been for a very long time. And that's the first premise, because the hallmark of the manipulation has been counterintuitive price action. And, whether it be the start of a war, or a market collapse, or whatever it may be, when we think the price of gold should be flying, quite often the folks in charge will sell short on the exchanges and drive the price down. Now, every time that happens in the middle of or in the midst of a market correction, stock market correction, that is attributed to traders rushing to liquidity, throwing out the baby with the bathwater, trying to grab their most liquid asset and use it to pay off margin debt or whatnot. I don't know that I believe it. I think, it's an attempt, I believe, of the powers that be to mitigate the outcome of the correction. It's to mitigate the thrust and the drive, not only to accumulate gold, but to delink the rationale that people would employ for owning it. Oh, it's an archaic relic of the past. It's a barbarous relic. It's not inversely correlated. See, the market collapses and look what happens. And even if I'm wrong, even if it truly is a rush to liquidity and the price falls, if we go back to 2008, that's a great example. And we've talked a lot about this, you and I, over the years, but in 2008, when the market collapsed, we saw immediately the price of gold and silver get clobbered. And gold fell from 1,000 to 700 and silver from 21 to 9. And one would think, in an environment where the price of asset A and B fell by 30 and 60% respectively, that there's no demand for that it's being dumped globally and the price is just cascading down. But that really wasn't the case, because in 2008, every single mint across the globe was shut down. Ultimately, the U.S. mint was shut down 7 or 8 times that year. And really, was the model of inefficiency, much more so than they were the last 3 or 4 years. But it was much deeper in that. The Rand Mint in South Africa, for the first time in its 60, 70-year history, was sold out of product. The Perth Mint that summer, August on, took no new business. That's it. We're out. And the Austrian Mint and the Canadian Mint were anywhere from 12 to 16 weeks back ordered. The US Mint, at the time, I was very close with a man who's no longer at Prudential Beige. He was the gentleman who nominated us to be an authorized reseller. And I would call him and talk with him quite a bit. And I remember having conversations with him, and he would say, listen, man, there's nothing you can do. We cannot take any orders right now. We'll let you know when you can, but everything's gone. Now, what was unusual to me, and this has really shaped my view of the physical world, is that the price was getting clobbered on paper, yet everything was gone. And it wasn't just that the mints were out of product. Refiners from Germany, or Ireland rather, would call me and say, listen, I've seen you before online. I know who you are. I've seen you at conferences. We have accounts at Delaware Depository, they would say. Our traditional supply chains in Switzerland and Germany are gone. They're dried up. We'll take anything that you'll give us. I would lay in bed at night and say to my wife, I think we're going out of business. I can't get anything. We can't place an order. And it also underscores, no one was selling. Nobody. I mean, nobody. And the public wasn't selling, even with the price getting clobbered. Nobody was selling. Everyone's freaking out. And I would say, what are we going to do? There's no secondary product. We've sold everything in our vault. We can't get anything. The US Mint says, we'll call you, don't call us. And then I get a phone call from David Morgan, the David Morgan, who everyone knows, the silver guru, who I've been very tight with for a very long time. I owe David a lot. He helped me a lot in this industry back in the day. And this was another example. He called me up before he called anyone. And he said, I will hook you up if you want, before I let anyone else know about this. He said, there's a group here in Washington I've been working with forever. They've been recycling silver out of medical devices. They're called Pyromet. They'd like to throw their hat in the ring, and they'll make 100-ounce bars. And these were the ugliest 100-ounce bars you've ever seen in your life. In fact, they just said 100 ounces. They didn't say what, 100 ounce what. And for months, and then he talked to some other dealers. Pyromet 100-ounce bars were the only thing you could buy, literally the only thing that you could buy in North America. And this probably would have been July, August. By October, early November, the Royal Canadian Mint and the US Mint finally started to say, all right, we'll take orders. With silver at $9 an ounce, you would pay $17 or $18 to receive your silver, and you'd wait anywhere from 12 to 16 weeks to get it. Had to pay up front. We can go back as recent as March of 2020, when the market collapsed. And what happened? I think it was pretty much coinciding, if I'm not mistaken. I think silver fell to $11. And you remember, you couldn't buy anything for short of $20 anywhere, and you'd have to wait, and you didn't know. There was uncertainty. So anytime that you distort reality, there is the unintended consequence on the physical market, where there are people who understand what's really happening. The value hunters say, I'll buy, thank you very much. And as the world is getting scarier, you look at it and say, well, geez, I mean, the price is $9 or $11 and I have to pay 20. How does that work? So the bottom line is that every single time I have seen this happen, you have about 10 minutes to react. Yeah, if you are really, really good and really lucky, when the market collapses and you feel like catching a falling knife, you probably have a day or two where you could do it. But it has been my experience that that's about it, because everything like that gets gobbled up at bargain hunter prices. And it's a distortion. It's all the same as the powers that be pushed oil down to negative $40 a barrel. How'd they do that? It's the tail wagging the dog. It's the futures market controlling the price. And so in an environment where the BRICS nations and the rest of the world are massively accumulating gold, I don't expect them to be able to hold the price down very long. You look at the corrections lately, they're very shallow. But if they are, and they're able to do what we saw in 08 and in 2020, within just a few days, the premiums were as much as 100% of the product with substantial delivery delays, or more than 100%. So it's a tricky one. If you're really good and really lucky, you may get away with it, but it wouldn't be my preferred plan of action going into what we're about to go into.
That's a good one. And yeah, we definitely saw in the flash crash of the COVID springtime that the spot price was, yeah, it was $11.88, something like that. And you couldn't get American Silver Eagles for somewhere between 20 to 24, depending on where you looked.
Yeah.
And that's what you've been talking to us about. And I guess if you broaden the context out, not just time-wise, but geographically, that the BRICS physical markets that are opening up in Shanghai and Moscow, et cetera, are exhibiting what physical cash and carry really goes for, and it isn't booted around by this derivative pricing scheme. If you want to hit on that one more
Yeah,
time, because that's
yeah,
that's the other
and I
separation
don't
that's going to happen.
I don't know that if it really is what the real price. So in Shanghai for a long time now, the price of silver has been much higher than in the West. It started out $2 higher, 250, 350, $4 higher on the Shanghai Metals Exchange. And I think that's well below what it should be, but it's enough to entice the idiotic traders who have the ability to buy in the West and deliver in the East. That's a pretty hefty arbitrage for them when you're talking millions of ounces. So yeah, I think this is certainly something that you could see being raised higher and higher and higher and higher to arbitrage everything that isn't nailed down. And so, with all the talk of revaluing gold and gold anyway, in the gold revaluation account these days, Senator Cynthia Loomis, the senator from Wyoming, talking about using it to fund the Bitcoin strategic account that Trump talked about when she spoke at the Bitcoin convention in Tennessee. The real price of gold and silver, no one knows what the hell it is. That's the truth, because of all of the distortions in asset prices over the last half a dozen years due to low interest rates and easy money. The one things that were stepped on and weren't allowed to over express themselves were gold and silver. And just based by the acquisition and by the backing of, when you look at the BIS and the IMF plans for cryptocurrencies or central bank digital currencies, all seem to be pegged to gold to some degree, whether it be the unit or the report that came out of the IMF saying gold is a barbarous relic, or an international reserve currency, a barbarous relic no more, question mark, or the Kristalina Georgieva, the head of the IMF, saying, CBDC is not pegged to something, would be fiat. They're all talking about gold, and I think the price is way distorted. And these countries have been using the suppression of the West to accumulate. And when they all have it, that suppression will end. It will end badly. You can only manipulate a market by pushing the direction it's going, at least for an extended period of time. And these countries are now, like I've been saying, motivated, coordinated, sophisticated, and wealthy, and they are using every chance they get to drain the system using these Western prices, which are artificial. They are not real. And even though they're higher in Shanghai to entice arbitrage, they're not real. They're not real, even remotely real. And they'll be much higher based upon the amount of currency creation and based upon the projects that are coming and what it means to, I think, install confidence in a system that's dying for some confidence, dying for something real, because we've squandered that, ad nauseum. So yeah, I think gold and silver will go higher than anyone thinks possible. 100%. And what we see in Shanghai is just the very beginning of it. I think before it's all said and done, you'll see them jack prices up more and more and more and more in the last ditch attempt to siphon away anything from this fraudulent Western system.
Just to corroborate what you were just talking about, just interviewed today Ed Steer in a sneak preview. That's going to be coming up later this week. But Ed Steer, a longtime associate of Ted Butler and also of Bill Murphy from GATA. And he said the way he sees it, there's an inflationary explosion coming that's going to be reflected in what he says is going to be just unthinkable heights in the price, the nominal price of silver for those who are prepared. But good luck to those who wait until it's obvious to everybody before they try to get
Well,
in.
and real quick, just as an adjunct, I mentioned this probably on your last show, but I did an interview with Sean Kuhn from Dolly Varden. He said, look, China is flying all around Latin America, and they are paying way more than the West will pay for unrefined silver in concentrate and doré form, and then shipping it back and refining it there. Well, that doesn't come off of an exchange. That is, and China's the largest producer of silver in the world, and they've just became a second largest, excuse me, second largest producer of silver, largest of gold, but they just became over the last few months a net importer. These countries are viewing commodities the way we've been talking about, the way that they would, and that the way that they are, and the West doesn't tell anyone, and so no one understands how significant this really is. But if it were so archaic, if it were so underperforming, then and I keep coming back to Ed Steer's graph, that he showed, where 8 banks hold the largest concentrated short position in silver of any commodity ever traded in COMEX history. Why? Silver is more important than the West is leading on to, and that is why you see China flying around the world buying unrefined silver and shipping it back. That's why you see India buying 700-800 million thousand metric tons over the last 3-4 years. This is a situation where silver and gold are far more valuable than the currencies that purchase it. Much of the world understands this. We don't. And to try and play games and try and bottom feed and get lucky, it's not something that I think will go over very well, especially with such a small participation of the U.S. public. If gold and silver are doing what they have been doing, let's forget about silver because it's been held down. But look at gold, and silver will surpass gold in percentage terms, I believe, before it's all said and done. But if gold is doing what it's doing with positive real yield, forget about the nonsense out of the BLS and all that stuff, but a positive real yield, a strong dollar, and waning participation by the West, what happens when that changes? What happens now that we're pivoting and we're going to lower rates and we're going to weaken the dollar and we're going to reignite inflation? And, does the public wake up to this and start buying? It's rocket fuel. But much of what we see in the metals market is illusionary, unfortunately, because it's the antithesis of the system that has been allowed to rise unabated versus gold and silver, which have been stepped on. And although they continue to move, I would argue stepped on to the point where they have not been allowed to fully express themselves to their real potential. Even gold, which has outpaced the S&P 500, and doubled the performance of the 10-year Treasury. Gold's 9.9% per year. It's up 20% this year. It's beating the tech industry. Where the hell is the mainstream media telling us
Yeah,
this?
right.
They don't want anyone to know about any of
Oh, here,
this.
I want to share, as long as you mentioned it, I'm going to share that Ed Steer chart because he just gave me an updated version of it today.
Yeah,
And
and so
here
what
it is.
people need to understand about that chart, the red line represents the top 4 largest commercial banks and shorting the market, and the green is the top 8. So it's a combination of the 4 plus
Hmm.
4 more. So
Hmm.
there you have it. You have 8 banks that have the largest short position in any commodity. Look at oil. I mean, it's just a blip, right?
Yep. Yeah, it's
That
down
they
there,
made that
two or
negative 40
three,
a
three,
barrel in
4 days,
2020.
4 days production. Yeah,
Yeah.
the y-axis is in days of production. Yeah, global days of production. Yeah.
Right. And so the question is, why would they do this? And I think you need to understand this. And silver is far more strategic than they're letting on. It's used in all the high-tech weaponry. And we're selling weapons around the globe. Look at the money they just again gave to the Ukraine. It's 100% in weapons. And so they need silver in order to create these weapons. And that's the hidden secret. That's the smoking gun. And you go back and look at the congressional meetings that they had in the 40s and the 50s that talked about the massive amount of silver needed for military. 200 million ounces a year they were talking about when weapons were nowhere near as sophisticated as they are now. So you ask yourself, why does silver do what it is? Why isn't it performing? Why is gold doing this and silver isn't? Why is it being stepped on? Why? Well, why are 8 banks shorting this when China's flying around the globe buying unrefined silver and India is buying 10 times the amount that is available for sale in COMEX and 2.5 times the amount that's available on the LBMA? Why? Because they know what we're doing. It's the exact same thing as the guy said in 2015 who runs the Shanghai Exchange. When China is allowed to speak at the table, the real price of gold will be known. It's the same thing as the guy who is now running the BRICS Grain Exchange. We produce more grain than the West does, and we cannot control the price. It's all controlled on COMEX, but this new grain exchange will change that. They know what we're doing with the metals, and they're beating us at our own stupidity. And if the public really knew just how stupid we are being by doing this, maybe there would be a little bit of a pushback, but you guys all out there know more than Fox News and the people who are supposedly trying to tell the public what's happening. So maybe that's by design. But the point of all of this is that silver is, to me, the most undervalued asset on the planet, and importantly so much so that 8 Western banks feel it's relevant to short it to the degree of the largest, and the top four: gold, silver, platinum, palladium. I mean, there's a lot involved. These are monetary metals. Silver happens to be also strategic, but these are metals that speak to the weakness of the bond market, of the currency, to the illusion of strength. It's pulling the curtain back behind the wizard, and it's a frail old man who's at 123% debt to GDP, broken, insolvent, and wayward. And so that's why they have to do this, but they're getting beat at their own game because these countries are way more sophisticated and motivated and wealthy enough to stand for delivery. And they'll keep doing it. And that's why they're not bitching, because they're the ones buying it. But that'll change when there's nothing left to be sold at the make-believe prices. And then bang, just like that, Shanghai, which has already increased over 200% in volume over the last several months, it surpassed the COMEX in volume. That's when you will see the Shanghai Metals Exchange take over for the price-setting mechanism of the world. And they will laugh at the LBMA and they will laugh at the COMEX and say this was a scam, just to the same degree that Bernie Madoff was a scam. He had a great business until everyone said, we'll have delivery of our money, please. It's the same thing here. So yeah, I think silver is the place to be. You have to have strong fingertips, trust your gut, and hang on, because it'll be a bumpy ride. But you will wake up on a Monday morning to a whole new reality. Oh my goodness, what just happened? That I'm pretty convinced of.
Now, you mentioned along the way there gold-backed currency plans being laid by the BRICS or other trading blocks. We had a question here submitted by Nick, who says, the next time Mr. Schectman is on, would you mind asking him about Robert Keynes's theory on a U.S. CBDC? Keynes suggests that the U.S. is developing a CBDC backed by some level of gold for use on Enbridge. Does Mr. Schectman believe that U.S. will participate in Enbridge?
I want everyone to know I happen to think Rob Keynes is one of the smartest guys I've ever met. And I've, over the years, bounced a lot of stuff off of Rob. I don't talk to him as much as I'd like to, but he's a smart dude. And I haven't seen all of his talk on CBDCs, but I do know that the Boston Fed created a CBDC with the help of Lael Brainerd. I know she was overseeing it. They have a couple of CBDC projects. I think one is called Project Cedar, and there's another one that it was used for. That's a wholesale CBDC, central bank to central bank, and there was another one, I forgot the name, that was more of a retail CBDC that they're working on. I've never heard them say they were going to peg it to gold. I do know the IMF, which is a Western friendly entity, they keep talking about or hinting at it. So I would assume that, when the head of the IMF, as I mentioned, Kristalina Georgieva, says a CBDC not pegged to something is fiat, talking about the virtues of gold in that report she wrote, or they wrote earlier in the year. I think they understand that we've reached a point on the road where if you don't peg it, it will be laughed at. It will not be adopted unless through force, and that's really that's really all that the dollar is right now, more or less, is something backed by the faith and credit. We're broke, we're insolvent, and what faith do we have any longer with all of the question marks about what we've talked about so much about what's happening in this country, and the rest of the world is wondering what is happening in that country, and everyone's wondering what's November going to look like. What happens if there's questions, a civil war type of question? Doug Casey's writing reports about there's going to be a civil war. It's like, where are we? This is a country that was admired so, incredibly strong for the virtues of, religion and judicial system and elections and all of these things that we held so close, freedom of religion and just freedom in general. And you have to wonder if all of these things are being thrown to the wind, and the rest of the world is. So yeah, I think they will have to peg it to something. Project Enbridge would work with a Western CBDC. It would, 100%. It is a very adaptable technology, I guess is the way they say it, in that it will accept central bank digital currencies, all of them. And that's the key to understanding what's happening with BRICS, by the way, is not a common currency. It's a common settlement currency. So every one of these countries will trade their own CBDC over Enbridge. That's the idea. Every country will have a CBDC. If you take all of the gross domestic product of the world, and 99% of the countries that make that up, they all have a CBDC in operation or development, near operation. They're all going in that direction. You go to the BIS website and look at their innovation hub, and they have all, in fact, this is one of the ones that Rob talks about. They have all of these projects that they are working on to address any possible problem, including a power outage, a grid down, a failure with the system, different currencies, different commodities, all of these things they are working on. We are heading in that direction. At this point, it's important to note that the dollar is not compatible with Enbridge. The SWIFT system is not compatible with Enbridge, but a CBDC that the West would create would be. And, the whole thing with Enbridge is that it will make it so that not any one entity can control the narrative. You cannot sanction over Enbridge. And it just makes it so that the West will not be able to impose their will by cutting people off of the SWIFT system. And if more and more and more countries are going to move in this direction and use things like Enbridge for oil, and it's very important to note that Saudi Arabia just became a full participant in Enbridge. It seems to me they have full intentions of moving in this direction. The oil producing countries, United Arab Emirates is one of the producers or the original designers of Enbridge. They're the seventh largest producer of oil in the world. OPEC member just joined the BRICS. We are moving in this direction. And so, yeah, I think that by hook or crook, assuming that we would be welcomed, we could see a CBDC that would trade on Enbridge. But we're a long ways away from that, not only in our relationship with those countries, but also in just the outright development and announcement of a Western CBDC. And I think we have to have some event first that leads us to roll that out. I've talked about that forever. Could it be as mundane as revaluing the price of gold, as the Dutch National Bank head of the Dutch National Bank said, or Senator Cynthia Lummis talked about? Maybe. Or could it be more scary, as Mike Adams, Operation Sandman, talks about? The night of the switch, they call it. Everyone has already, it's preordained. They're going to dump at some point and create that moment that we've talked about, the hyperinflationary tsunami where interest rates go to the moon to compensate and blow up the whole system. Don't know. But yeah, I think let me put it this way. The technology is there whereby any CBDC would be compatible. And the question is, would we be welcomed? And would we have a system that would be more Western oriented? Would it be the G7 and the IMF behind it? Or would this be, I think what Rob really believes is that what Enbridge and the unit and the BIS ultimately want is a one world currency that we've heard forever. A world that is controlled by one group of people pulling the strings way up high, and that's ultimately what they're talking about. Indeed, if the West were using Enbridge like BRICS, you're that much closer to a one world currency. If you have the West and the East now using the same system, which when you look at it from the standpoint of where we are right now, it's hard to believe. But take a step back and like the BIS is not they're consulting with Enbridge. They're not part of it. They didn't develop it. So I'm not exactly sure how this all plays out, but I will tell you that the technology would work, and it would be a much better world if we were all using it, at least in terms of the geopolitical outlook. But I wouldn't say it's a slam dunk.
As long as we're talking about different regulatory effects on precious metals. We had two questions. I'll tie these together. Paula Ashley asked, "Is pre-33 gold subject to capital gains tax?" And Info Plus said, "Should I sell my Maple Leafs and focus on American Eagles?" Do you want to address that thing about dealer reportability versus capital gains tax that's we're supposed to be self-reporting or whatever?
Yeah, so the answer is that anything that you sell, uncle's going to be there like this, give me my gold or my money. Those coins do not trigger dealer reporting requirements. They would, however, need to be reported by you, at least if you're following the law. Um, but they would not trigger dealer reporting requirements. As far as Maple Leafs are concerned, it's an interesting question. I mean, it's a fair question. Um, if you were sitting at the table with me that night, I had dinner with Jim Sinclair, and I mean, maybe it bears telling the story again, real quick. Um, Jim, I've known, God rest his soul. Bill Holter's one of my dear friends, and I was having dinner with Jim and Bill. They were partners in Connecticut. Jim was known as Mr. Gold in the 70s, and he said to me, "Andy, I'm Jewish." I said, "Really? Why are you telling me this, Jim? And by the way, Sinclair doesn't sound Jewish." He says, "You're right. My last name is Seligman. My father was Murray Seligman. If you Google Murray, you'll see he was a famous commodity trader in Wall Street that was involved in unwinding the Hunt brothers position." He said, "I went to elementary school. Catholic school was picked on for being Jewish. So when I went to middle school in another town, I changed my name to Sinclair, took my mom's maiden name." He says, "But," I said, "Okay, well, why are you telling me this?" He says, "Well, um, I'm related to the Goldmans and Goldman Sachs, and they told me there would be two resets. The first one is man-made." Now, I would argue, Dunnigan, that we are in the midst of that man-made reset right now because it's just too stupid to be stupid, or as Bill would say, too stupid to not be planned. All the stuff that we see around us is just too stupid to not be stupid. I mean, it's just stupid, all the stuff we see. And he said that will fail. And when the second reset comes at the behest of Mother Nature, the US government will confiscate everything that is not American made. Take it for what it's worth. I still own stuff that isn't American made, but I have traded a lot of my bars for American Eagles, and I lost a lot of silver. In terms of gold, I pretty much only and have always only owned American coins, either pre-33 or Eagles or Buffaloes, just because I've always preferred them. Um, but there are reasons to own the American coins for sure. That would be one of them if you believe it. I know Bill Holter believes it. And I know Jim believed it. I can't vouch for its validity. But with the legal tender laws being passed, with the performance of the US Mint during the pandemic versus everything else, I would normally say, no, that's stupid. You're going to lose gold and silver. But I would honestly say to you now that I understand it, and I would contemplate it. Um, it's not the wisest thing to do in terms of the ultimate bottom line, but sometimes there are motivations that go beyond the bottom line. So if you did it, I'd understand it. I wouldn't ever advise it openly. If you had other things that weren't Maple Leafs, I might say, yeah, I could see it. Like, 100-ounce bars. Yeah, you're going to lose some silver, but you have a much better form that has better potential and has now 11 states that have passed legal tender laws and upwards ends of 20 that are contemplating it. And, there's something to be said for utility and versatility and an American Eagle. You put an American Eagle in someone's hand, and even though it's only 1 ounce, if they've never seen it before, they're like, man, that is cool. And, I'm sure they'd say the same thing about a 100-ounce bar, but it's not easy to buy, a pack of chewing gum with a 100-ounce bar. So, nor is it easy to buy with the Silver Eagle for that matter, to be fair. But anyways, the point of it is that, yeah, I would contemplate it, but it would not be conventionally wise.
Yeah, and I just want to clarify for everyone, it's probably clear to most, but for those who may be newbies, when you say you'll be losing silver, that since when you're swapping in, like, say, 100-ounce bars for American Silver Eagles, you're swapping in something that's one of the least expensive per ounce forms of silver for something that's one of the most expensive forms per ounce of silver. So if you start out, say, with 1,000 ounces, you might end up with 800 or something like that. And when you go through that process, because there's going to be the premium difference when you're selling a cheap form of silver and ending up with something that's more high premium. But again, from my background as a preparedness channel, the whole purpose of having assets is what are the options that they bring you? What utility can they have? How many ways? What's the total universe of possible trading partners that you could consider? Are you going to, in times of reduced trust? And again, as James Rawls, the founder of survivalblog.com, reminds us, we are in the age of deception and betrayal. So you should plan accordingly, prepare accordingly, invest accordingly. Having an asset that's going to be the most recognized, the most trusted, the most liquid, and give you the least friction, because there's another saying that if you don't have what the other person wants, you don't have anything. So you don't want to find yourself in a tight pinch or an opportunity that you can't capitalize on because the asset that you have is the wrong type that the other person doesn't recognize or doesn't trust, or it's just the wrong size for the need. So that's
Yeah,
just have something that's
and what you
useful.
said, it's so true and so sad. I mean, we are in the age of deception and betrayal. I watched a show on the Bilderbergs and the Trilateral Commission last night. And it's very frightening where we are. And I think these are unconventional times. And that's the truth. Unconventional times call for unconventional thought and action. And it's better to, be accountable and trust your gut. And if it feels right, do it. Um, because these are scary times. And who's to say that, Jim wasn't right? Who's to say that your gut isn't telling you to do the right thing? It's not always, I mean, Richard Russell always said it's about the number of ounces that matters. So I do agree with that to an extent, but also the form of it is important. You can have the greatest thing in the world if it lacks liquidity. How great is it? And so, not to say that a maple leaf lacks liquidity, it's just peace of mind and sleep at night is worth everything. And if you sleep better, because I mean, I'll put it to you this way: if I had my druthers, if I had to do it all over again, I would own nothing but American made coins, period. Don't know why I even say that, just because I prefer them. And I think they are probably more desired in the United States. Um, that does not mean that anything else that you could own is bad. For the last 4 years before this last year, I told everyone, do not buy American coins. They're too expensive. Buy bars. There are times when, even the best laid plans need to be reevaluated. And this is one of those times, as was that a few years ago during the pandemic.
Another question that went by here on the live chat was about gold for silver swaps, or when to do one way, when to do the other way. Just checking out, I was looking at the gold silver ratio chart, noticing that after we had hit, when silver was remarkably strong, above 32 in June, the gold silver ratio had dropped down to like 72, and now we're back up around 85 to 1. So the question is in your view, is this still a reasonable time for people who maybe have holding gold, but thinking, as you mentioned, silver being the most undervalued asset, might be a reasonable time to do a gold for silver swap?
I mean, it is. Um, I've been buying gold too, because in the end, I think gold is the place to be. Here again, we have to time this properly. Um, Silver is by far the investment of a generation, and I don't say that lightly. There's nothing like it, and that chart should really hammer that home. These banks that are shorting this metal, not only are they sophisticated, they're informed and probably being told to do it by the West, the military industrial complex, or whoever is stupid enough to tell them to short silver to that degree, naked short in what amounts to a drive to accumulate by the biggest powers in the world. It's a very dangerous game. 85 to 1 is an anomaly historically, geologically. It's 11 times higher than just about than it's coming out of the ground at. It's contrived. It's enough to make China go all around the world or all through Latin America and buy unrefined silver concentrate and doré. They are beating us at our own game. Look at the drawdown in the LBMA vaults, the lowest they've had since they started keeping records. Um, so yeah, I mean, in a perfect world, you buy silver or trade gold to silver at 85 to 1, and when it gets anywhere into the 40s, you switch back. And even at 42 to 1, which is just above its 200-year average, you're still 6, 7 times higher than it's coming out of the ground at. I mean, it's one of these deals where the potential is extraordinary due to the suppression. And the old saying, the market can stay irrational longer than you can stay solvent. And that's been the case for a while. But in 2010, when I noticed this and called Bix Weir and said, Bix, we got to do a podcast, got to tell everyone to sell their gold right now. It was 85 to 1. I said, Bix, this is the second time I'm going back as far as I can see, all the way back in charts. And it's the second time it's ever happened. And so in theory, in 2010, you trade me 1 ounce of gold and get back 85 ounces of silver, of course, depending upon the form. 7 months later, knowing that 42 to 45 to 1 is the 200-year price average, not the geologic, but the price. Man's ratio, as Bill Holter calls it, not God's ratio, which is geologic. And within 7 months, you had 37 to 1. You had $50 silver, 1915 gold. In 7 months, you would have only needed 37 ounces to get back that 1 ounce of gold. You would have doubled plus what you started with. And it worked. It was orderly. It was smooth. It was clean. But would it be this time? What are the variables? What is Murphy lurking around the corner, just to revenge, and is gold all of a sudden disappear? Or I don't know. So in theory, yes, it is the trade of my career. I mean, I could see that being the trade. And I've had some really good ones, playing the Swiss franc when they decided to not join the European Union. That was a good one. And there have been some other really good ones, but every one of the biggest trades I've ever done in my career center around exploitation, first identification of price anomalies. This is a price anomaly. And so, yeah, from a standpoint of actual numbers, yeah, it makes great sense. Bix Weir would scream at you, yes, do it. So, I just like people to understand that nothing is a guarantee. But in terms of a calculated speculation, it's the best I've seen in 34, almost 35 years in finance. I've never seen something that silver offers something called asymmetrical risk reward, the best I've ever seen, which means it has, in my mind, the lowest downside risk and the best upside potential of anything I've ever seen. And an asset that is depleting in nature and massively being accumulated by most of the world in quantities that we've never seen before. So problem here is that the price setting mechanism, the exchanges of the West mask and blur and confuse reality. And so it's hard for people to know just how good of a deal this really is, but it truly is I think, a special opportunity if pulled off right.
All right. With respect to everyone's time too, I wanted to make sure and give people a chance to see the weekly specials here before we
You're gonna have to show them
wrap.
to me. I know they're
Let
20.
me
I
do
know
it
they're
right now.
old
I'm going to
pieces.
do it right now. Here we go.
Okay. Well, I thought it was something else, actually.
Are these obsolete? Are these last
I
week's?
thought
Hold
they
on.
were the old
Let me check.
numismatic coins. I
Krugerrands,
think.
Maple Leafs, Phillies, and Brits. No, this is what just came out yesterday.
Let
Day
me
before yesterday.
see real quick. Hold on, because I'm half blind. I got to put my glasses on. Let me see. Hang on. But you might be right, but I don't think so. Hang on. They usually talk to me about it at the beginning of the week, and what we had was a little bit different. I thought.
Okay.
Geez, I wish I could get a
Yeah,
hold of.
this is what was on the sheet.
Yeah, it is. Okay,
Yeah.
it is still there. That's really strange.
So maybe there'll be something else coming out later this week. Well, if we get an update, folks, we'll make sure and update
I
what we
apologize
have.
because I had something completely different.
Okay.
But those are the same as last week, I believe. Oh, here it is. This is okay. So we'll talk about these, and then I
Okay.
have the other
Sure.
special
Okay. All
here.
right. Okay. Good.
So yeah, so I mean, look, I've never seen a 1/10 ounce coin other than maybe I think the Mexican mint makes them, made by a government mint. They're 4.99 a coin. They're expensive. It's 50
For
bucks an
silver.
ounce.
Yeah.
But from a standpoint of trading, it's pretty cool. I think having some is a good idea. Um, the Silver Philharmonic being the next one, 310 over spot, one of the six major mints, great coin. Um, you know, Great coin, and cheaper than the American Eagle by a couple of bucks. And you got the 1 ounce Krugerrand, again, just bullion gold, the oldest 1 ounce gold coin you can buy, $60 over spot. That's dirt cheap. Is there anything else on
Yeah,
this
platinum
one? And
maple
then the
leaf.
platinum
Yep.
maple leaf. This is the one that I think of all of these is probably the most enticing. Platinum has a convincing argument to it, although it is more industrial. I like it. I think it's not a bad choice. The ones that I'm intrigued by are as follows, and I don't think you have any I don't think that you have any
Graphics for
pictures
these?
of these. Yeah.
Okay, all right.
So we have the following, and I haven't done this for a long time, but I love these coins. All right. So let's start with the 2.5 Indian in extra fine grade. Um, it's well, so it'll be 1, 10, 5. So it's basically an eighth of an ounce. Half, yeah, basically an eighth of an ounce, just under. And it's, you know, the 2.5 Indian might be one of the only numismatic coins where you could actually own all of the dates. There's not that many of them. There's one or two that are really expensive, but it's a really cool coin.
These are
That would have been
gold.
in someone's pocket.
Pre-33 gold. Yeah.
Yep, that would have been in someone's pocket 100 years ago. Then we have the $5 Liberty, an AU grade, and the 2.5 Indian, by the way, is melt plus $120. And maybe you can figure out the melt for me. Dunnigan, actually, it's
Sure. Yeah,
0.9675.
divided by eight.
Oh
Yeah.
God, that's the 1 ounce and divided by
Mm-hmm.
eight.
Mm-hmm.
Anyways, then we have the $5 Liberty melt plus 120 as well. In AU grade. We
Yeah, so
have
the $2.50 XF Gold Indians, those are pre-33, and those contain
these are
point
all
one.
pre-33, every one of
Yep.
them.
They
The
contain
$5 Liberty, the $10
point.
Liberty, and the $20 Liberty. They're all melt plus 120, all of them. And the
Oh,
5
okay.
and the 10 would be really a good deal. As I mean, the fact I can't ever remember seeing fives, tens, and 2.5s at the same price as the 1 ounce. Um, the $20 St. Gaudens AU. I'm not sure why they did it this way, but they have it as spot plus 25. I'm not sure why they did it that way, but oh well. I guess we'll find out what that's all about. See, remember the $20 coin, the Liberty and the St. Gaudens, the same amount, but they're 0.9675 of an ounce. So,
Mm-hmm.
anyways, we have them in circulated AU grade as well, and then bags of junk silver at $2.10 over spot. That's as good of a price as we've seen in a long time. I think they're mostly quarters and half dollars, no dimes in this batch. And and so if you're looking to buy gold and want some of the pre-33 stuff, I've never seen in years prices like this, and it's very, very cool stuff to have some of this old pre-33 gold at prices that are not, they're in the same, they're on par with gold bullion in the same size. So that's something you don't see very often. I really like them a lot. All circulated AU or XF. AU is high quality. It's almost uncirculated. It'll look really nice. And they're my favorite coins. All of these. The pre-33 gold would be my favorite. I never talk about them because they've usually been too expensive, but not these. And they're super cool. And if you're looking to buy some gold, it's a good place to go.
Well, we will get the details on this and make sure we put it in our newsletter starting tomorrow. Folks, if you haven't already signed up for our free newsletter, did I say free? It's totally free. Just go to libertyandfinance.com, libertyandfinance.com, all spelled out, all one word, and put in your email address, click submit, and then make sure you confirm on the confirming email. You'll get one email per day with our latest interviews and all of our specials, and we'll get this in there because we didn't have this as a press time.
Yeah, sorry
So
about that.
that's right. So thank you, Andy, for joining us and everybody for being here. We've already had almost 3,000 views just here together. And please share this, guys. Make sure that you subscribe and like and share this. And that way we're helping as many of our friends, neighbors, family members, coworkers to get to a place of better protection than they are at, because they're not going to hear this stuff that Andy was sharing with us from their retail financial advisors. They're not going to hear it on the mainstream financial press. That means they're exposed to the dangers that are coming. And there's a lot of potential volatility ahead for as we approach the election season, and October is a historically volatile month, etc. It's hard to picture not having some civil unrest. God help us all, and help our beloved country,
I
our
think it's
republic.
impossible to not think it's going to happen something.
Yeah.
I hate to say that. I do, but I think it's impossible. I just, an eighth of an inch separates chaos from calm a few weeks ago. I hope, I hope we get lucky again. But yeah, this is none of what we talk about, Dunning, and none of it is about investing. It's about getting out of the way of what's coming. And when you see things that are just too stupid to be stupid over and over and over and over and over again all around the globe, a lot of it at our hands, then I think it's time to be very defensive right now over the next several weeks and coming couple of months, because I have a hard time believing that things will go smoothly as we head up to the BRICS meeting and, of course, head up to the election. So I guess only time will tell. But thanks for having me. And as I mentioned, I have a fantasy football draft next week, Wednesday night. So we're going to move it back a night to Tuesday night. There are some things that are very important. I've been in this league since I was 20, maybe. So it's been a long time, all my oldest friends in the world. And as much as I love being here with you and all of you, I'd be in big trouble if I missed that draft. So thanks for pivoting with me for next week, Tuesday night, and then we'll be back on Wednesdays moving forward.
Yep. So, folks, that's next week only. Our live stream is going to shift to Tuesday night, and that was our old Tuesday night live stream, 8 p.m. Eastern, 5 p.m. Pacific, and then we'll revert back to Wednesdays thereafter. Thank you, everyone, for being here. Andy, always thanks for fielding so many viewers' questions and giving us the benefit of your research and your experience. And thanks, as always, for joining us on Liberty and Finance.
Look forward to seeing you next week. Thanks again.